Federal Reserve expected to reduce interest rates for the first time in close to 4 years.
It could have a huge impact from housing prices to credit card debt. Eyewitness News reporter Mark Coteropolis live in Pasadena with the details. Mark.
Yeah, Rachel, John, good morning. For millions of Americans, this will be welcome news, and especially for those people looking to jump into the housing market. Of course, the record high interest rates have made purchasing a home nearly impossible. A rate cut, it will help. When the Federal Reserve concludes its policy meeting today, almost all economists do expect the Fed will lower its benchmark short-term federal funds rate, which currently sits at a 23-year high. But it's not clear whether the decrease will be by a quarter or a half percentage point. So nothing definitive this morning, as expectations are divided as to how big it will be. Some economists have told us whatever happens, it's likely just to be the first of multiple rate cuts.
You look at places like San Francisco, where the vacancy rate for office buildings is 36%. That's unheard of. But I don't think it's dangerous enough to cause a recession. And hence, once again, it's time for the Federal Reserve to lower the interest rate. People who have a house do not want to buy up because they are locked into lower interest rates. And the only interest rates they can get now are higher, right? So lowering interest rates there will have a positive effect on the housing market and hopefully in terms of sales and housing starts.
So what's making this possible? Recent data suggests that inflation has dipped closer to the Fed's 2% target. With those inflation figures improving, most economists are forecasting additional rate cuts by the end of the year. So what does that mean? First off, as mentioned, it should lower borrowing costs for mortgages. In fact, buyers could see a $9,000 increase in buying power. That's if mortgage rates fall to 6%. It would also impact auto loans and credit cards, even business loans. Business spending could grow, so could stock prices. Plus, companies and consumers could refinance loans into a lower rate. The question is, if you are refinancing, do you do it right now or do you wait until that second or third cut and save even more?
Hello, I'm Mark Brown. Get more great ABC7 content by clicking the subscribe button for our YouTube channel and download the ABC7 Los Angeles streaming app on Fire TV, Android TV, Apple TV, and Roku to watch on your TV.